Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria. I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, candlestick patterns in Nifty, Bank Nifty, as well as on the different asset classes. Now, first of all, let us discuss what we have mentioned in our last video. In our last video, we have mentioned there was a triangular breakout. After that, Nifty was into overbought territory. Some sort of pull-off could be seen. It corrected, and we had a view that buy on dips should be the strategy. Nifty did correct. It found support at the lower levels. It rallied on Thursday very sharply, but due to the global cues, because of inflation, then because of the ECB statement that they are going to raise the interest rate. Again, FOMC meeting is going to be there in the foreseeable future. So because of that, we have seen that the global markets seeing some sort of correction, and on the back of that, on Friday, we saw some sort of selling pressure coming into the markets. Though we had buy and dip strategy, uh, on Friday, markets ended on a negative note. So now let us go to the Nifty daily charts and we'll try to figure out what could be the trend for the next week. And accordingly, we will try to analyze what would be the levels to be watch out for. So this is the Nifty daily charts. This is the falling channel since August 2021. Since last 7 to 8 months, October 21, Nifty has been into a time correction. It has already corrected almost 14 to 15% from its high. Currently, it is just near or on the midway of this particular channel. Now, this is what we have seen on the daily charts. Now, let me put a parallel channel so we will have a clear view. So this is the parallel channel which we have witnessed in the last 3 to 4 weeks, or maybe last 4 to 6 weeks. So now it has just come near the support, downward support of the rising channel. But most probably, I would like to just show you the charts of Dow Jones, so we will have a clear view about our markets for the next week. So if we can see this Dow Jones has been moving into this particular range, and it is just come to the particular support area. Now let me put this horizontal line so we will have a clear cut view of Dow Jones. Now here Dow Jones is into a multiple support zone, and we are expecting that maybe next week, maybe Monday, Tuesday, or Wednesday, we might see support coming in the Dow Jones, and then we might see a sharp recovery, maybe in the next 5 to 7 trading sessions in Dow Jones. So now this was the resistance area. Then it witnessed a breakout. Then again it witnessed a pullback. Then it again rallied. Again it came back to those particular area, rallied, and again it is coming to those particular support zone. So definitely markets are into oversold territory. Further downside cannot be ruled out from here, but we might see support coming in at the lower levels. Now again, let us go to the Nifty daily charts. Nifty daily charts, as we have been discussing, that this was a parallel channel, and looking at the Dow Jones and global cues, we might see Nifty breaking this channel, or it might come down to the levels of maybe 16,000 or levels, which is a psychological mark. And from those levels, we might see again Nifty start rallying upside. But this could be a slow and gradual move. Now, many times we have seen that after this particular pullback, I mean, this a bounce back, again there has been a retracement. This retracement of this rally is almost more than 50%. So maybe it can go down to maybe 61.8% of this particular rally, and then we might see Nifty taking pause and again going upward. Because on the larger degree charts, say maybe on weekly, you can see that again it has been moving in this particular band. This area is a multiple support zone. So definitely, next week would be a crucial one. We need to watch where Nifty is taking support and bouncing from those levels. So now let us come to the important support and resistance in the Nifty for the next week. The important support for the next week in the Nifty is placed at 16,078. Then second support is placed at 15,903, and third support is placed at 15,777. Whereas on the upside, the first resistance is placed at 16,324. Above that, the second resistance is placed at 16,514, and third resistance is placed at 16,616. So these are the important supports and resistance level in Nifty for the next week. Now let us discuss what we have observed in Bank Nifty. Let me go to the chart of Bank Nifty so we can uh, take a view, and let me draw a parallel channel from here. Again, Bank Nifty has also, you can see here, Bank Nifty has been moving to upward rising channel. This was a triangular breakout here. Then it witnessed a breakout on the upside. Again, pullback in that particular region. So, looking at the global cues purely, if the global cues were uh, either flat to positive or flat to slight negative, we would have strongly recommended to buy on Monday. But looking at a crack on Dow Jones, we might see a further weakness on the Bank Nifty from here. Already since last maybe 10 to 12 trading sessions, Bank Nifty has been correcting, so it is into oversold territory on the larger degree charts. Maybe again from here, maybe 34,000 or 33,900 could act as a support in Bank Nifty. From those levels, we might see a bounce back in the Bank Nifty from that lower support region. So this could be the area, cluster area, where I am looking out for a support region where Bank Nifty might take some sort of pause in this downward falling trend of last 10 to 12 trading sessions. So now let us discuss the important support and resistance in the Bank Nifty for the next week. The important support in the Bank Nifty for the next week is placed at 34,117 is the first support. Second support is placed at 33,821. Third support is placed at 33,313. Whereas on the upside, the first resistance is placed at 34,752. Second resistance is placed at 35,149, and third resistance is placed at 35,449. So these are the important supports and resistance in the Bank Nifty. Traders are suggested to watch these levels closely and then trade accordingly in the direction of the trend. So, in this kind of situation or in this kind of trend, I would suggest day traders to watch out for first half an hour range in the Nifty and Bank Nifty, and then trade in that direction of the breakout. I mean to say, just watch out high and low of first 30 minutes of trade in Nifty and Bank Nifty from 9:15 to 9:30. Mark high as and lows, and then trade in the direction of the breakout. If it breaks high of that per 30 minutes range, then go long. If it breaks low of this 30-minute range, then go short. This could be the strategy which should be used in this particular situation where the setup is into oversold territory. So further downfall on Monday could be an important level to be watched out for. We might see a short covering at the lower levels, so it will be very crucial on Monday. So traders are suggested to be little cautious and try to just play this strategy, but it is only for the high risk traders. So now let us go to the third segment of our show, which is option analysis. In option analysis, we try to figure out what or where is the concentration of the smart money in the calls and puts in Nifty and Bank Nifty, and we'll try to figure out what could be the trend for the next week. So first of all, we see what we have observed in Nifty calls. You will see on the screen in Nifty calls, the open interest was seen in 16,300 calls, 16,400 calls, 16,500 calls, and 16,600 calls, and even in 16,700 calls. So every 100 points out of the money call, there has been a rise in the open interest, but the major volume is in this particular region. See, you have seen a significant drop in this option premium. IVs are also between 17.16 and sorry, 16.91 to 17.16. You can see the implied volatility, the percentage change has a significant drop, the rise in the volume, which clearly indicates that on Monday, due to the sharp sell-off, the smart money might have start writing out of the money calls of maybe 16,400, 16,500, even 16,300. So, looking at the global cues, again further gap down cannot be ruled out, but from the lower levels, we might see a short covering because of the oversold setup in the markets. Now, let us see what we observed in Nifty puts. In Nifty puts, we have seen that action was seen in 16,100 puts, then 16,000 puts, then 15,900 puts, and 15,800 puts. Now, here you can see smart money has been buying this out of the money puts. You can see the change, percentage change in this uh, positive change in Nifty puts. Implied volatility is slightly going or rising. You can see it is between 19.89 to 20.74. So on Monday, it will go into a danger zone. Maybe it might go, implied volatility might go between maybe 22 and 23. That could be the danger zone. So once Nifty uh, goes into this particular zone, looking at this implied volatility, we might see short covering coming in from the lower levels. Though on Friday, I was expecting that smart money might start writing put from those levels, but Nifty ended on a negative note. So maybe on Monday, we might see after a gap around opening, we might see smart money might starting to book profits in Nifty puts and start writing puts. This is my expectation looking at the global cues because they are coming at the strong support area and oversold setup into Indian markets. Now let us come to what we see into the Bank Nifty options data. Let us see what we observed in Bank Nifty calls. In Bank Nifty calls, the action was seen in 35,000 calls, 35,500 calls, and 36,000 calls. Now here you can see there has been a significant drop in the option premium. Implied volatility is also high. It is between 20.83, sorry, 20.25 to 20.83. There has been a rise in the open interest. There has been a concentration of this particular out of the money calls. Smart money has done call writing because of sharp fall on Friday. So as I said, implied volatility is shooting up. On Monday, it might go into danger zone, and we might see a short covering coming on the second half of the day on Monday. So one need to be cautious. Those who are those who have done Nifty writing of Nifty, sorry, Bank Nifty calls might start booking profit on during the first half of Monday because we might see a bottom yard formation taking place on Monday, first half. So now let us see what we observed in Bank Nifty puts. In Bank Nifty puts, you will see on the screen the action was seen in 34,000 puts, then 33,500 puts, then 33,000 puts. Now here you can see that smart money had bought Nifty out of the money puts. There has been a rise in option premium. Implied volatility is already into a danger zone. See, you can see it is between 22.56 to 24.61. There has been a rise in the open interest, rise in the volumes. So as I said, on Monday, it is Bank Nifty puts are already into danger zone. It will go into highly danger zone on Monday. So on Monday, after first hour, I'm expecting some sort of short covering coming in the later part of the day or on the second half of the day. So one need to be cautious while going short, or one should be booking profits if anybody is short in the Nifty and Bank Nifty. So overall, looking at the global cues, the charts of Nifty and Bank Nifty, the open interest data of calls and puts in Nifty and Bank Nifty, the strategy still remains buy on dips on Monday, Those who are short should try to book profits in first half of our day, and one should try to try to use the strategy of first half an hour range and try to trade in the direction of the breakout of the highs and lows of the first 30 minutes of the trade in Nifty and Bank Nifty. So now, friends, let us come to the third segment of our show, which is positional call. I've identified one stock. The name of the stock uh, you will see on the screen. The name of the stock which I have given is from the mid cap. The name of the stock is Bombay Textile sector. Let me go to the daily charts. Now this is the daily chart of Bombay Dime. The stock has been moving since long period of time in the rising channel. Now let me draw a rising channel from here. So we will have a clear view from these levels. Now you can clearly see from multiple times the stock has taken multiple support and it has rallied from this support trend line of this rising channel. Let me put RSI, so we will see. So here RSI is also into a positive zone. It is just above the trigger line, but maybe because of Monday negative cues or negative opening on the markets, we might see stock drifting a little bit more. But looking at the past history of maybe from March 2020, the stock has potential to rally and test the upper trajectory of this rising channel. So we recommend long-term investors to buy the stock on dips to 107 to 105. Upside positional target for long-term is 145. So those investors, positional traders, swing traders who want to take a little bit long-term call can accumulate the stock on dips to 107 and 105 for an upside target of 145 in long term. But definitely, Bombay Dime should be on the investment radar for long-term investors, positional traders, as well as for the swing traders. So let me conclude the show. Thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.